All right, let's talk about something every single trader knows. That sinking feeling in your stomach. You know the one. It's after your third, fourth, maybe even your fifth losing trade in a row. We're talking about the dreaded losing streak. It's this period of just relentless red that can absolutely crush your account, and maybe even worse, your confidence. Well, today, we are going to figure out how to survive it. But here's a thought. What if we could just totally reframe this whole experience? What if a losing streak wasn't some random sign that you're a failure, but a mathematical certainty? Think of it like a storm you can actually see coming on the horizon. You can prepare for it long before it ever hits. And that is the huge mindset shift we're going to explore. All right, let's get right into it. The very first thing we have to tackle, maybe the most important mental shift you can make, is getting one thing straight in your head. Losing streaks aren't just possible, they are absolutely 100% inevitable. So, first things first, let's make sure we're on the same page. What even is a losing streak? Well, it's just a series of losses that, cause a temporary dip in your account. And I really want you to focus on that word, temporary. It's a totally normal part of the process. It is not a sign that your whole strategy is broken. And you really need to let this sink in. This happens to everyone. I'm talking about the pros, the veterans, all those traders you look up to. Every single one of them faces losing streaks. So what's the difference? It's their perspective. They don't see it as a failure. They see it as a cost of doing business. It's just something you manage, not something you fear.
Okay, now for the really interesting part. We're going to stop talking about feelings and start looking at the cold, hard math. Because that's what this is all about. It's not about how you feel, it's about statistics.
So, let's imagine you've got a pretty solid trading strategy. Let's say it wins 60% of the time. I mean, that sounds fantastic, right? You're winning way more often than you're losing. You should be feeling pretty bulletproof when it comes to long strings of losses, right? Or maybe not. Well, here is the reality check. Even with that awesome 60% win rate strategy, you can statistically expect to have 4 losses in a row about once every 70 trades. And 6 in a row? That's going to happen about once every 400 trades. See, these aren't some freak accidents. They are predictable, mathematical events.
Okay, but let's be honest for a second. A lot of really profitable strategies, especially the ones that go for those huge home run wins, actually have lower win rates. So, what happens when your win rate is something more like, say, 40%?
And this is where it gets really scary. With a 40% win rate, a streak of 4 losses is expected pretty much every 7 trades. And an 8-loss streak? Yeah, that's probably going to happen every 100 trades or so. If you haven't prepared for this mathematically, you're setting yourself up for a complete emotional and financial disaster. It's almost guaranteed. Okay, so here's the deal. We know these streaks are coming. The question isn't if anymore, it's when. So this is where we pivot. We stop just understanding the problem, and we start building our defense against it. It's time to open up the toolkit. And the number one tool, the absolute most critical piece of your defense, is this: conservative position sizing. Look, I know it's not the sexy part of trading, right? But I promise you, it is the single most important factor in whether you survive long-term.
Okay, let's make this super practical. Let's take that 8-loss streak we know is coming, and let's apply it to a $10,000 account. If you're risking a conservative 2% on each trade, you're looking at a manageable 15% drawdown. But if you get more aggressive and risk 5% per trade, that drawdown skyrockets to a truly catastrophic 33.7%.
So, after 8 straight losses risking 2%, you're left with $8,500. Does it sting? Oh yeah, for sure. But is it recoverable? 100%. You are still in the game. You've got plenty of capital to keep executing your strategy and just wait for the wins to come back. Now contrast that with the 5% risk scenario. You're down to just over $6,600. This is way more than just a financial hit. It's a deep psychological blow. And this is the point where the demons come out. Panic, revenge trading, fear, they all take over. And it's what causes so many traders to blow up, abandoning a perfectly good strategy at the absolute worst possible moment. So how do we stop ourselves from doing that? How do we enforce this kind of discipline? Simple. You build an emergency brake system before the crisis hits. These rules aren't suggestions. They're your non-negotiable tripwires. When you hit a 5% drawdown, boom, you cut your size in half. At 10%, you're done for the day, maybe longer. And at 15%, the computer is off. You stop trading completely and do a full review. These are hard and fast rules designed to protect you from yourself.
And of course, it's not just about the numbers. You gotta build that mental fortitude, right? This means preparing yourself psychologically for the tough times, knowing when to step away and take a break, keeping a super detailed journal so you stay objective, and hey, don't be afraid to lean on a community for support. All of these things are what help you stick to the plan when it feels like the world is ending.
Okay, now we're gonna level up a bit. This is a more advanced skill. So you're in a drawdown, you're managing your risk like a pro, but there's that nagging question in the back of your head, right? Is this just a normal dip that I need to ride out, or is my entire strategy completely broken?
So how do you tell the difference? Well, a normal drawdown, it's painful, yeah, but it's still playing within the rules of your historical backtest data. Strategy failure is different. That's when performance is way, way worse than anything you've ever seen before. The market itself might have fundamentally changed. Maybe you're a trend follower and there just aren't any trends anymore. The first one requires patience. The second one requires a full stop and a total reevaluation.
All right, so this brings us to the final, and honestly probably the most important shift in mindset of all. It's all about moving your focus away from the day-to-day noise of individual wins and losses. And if you take away only one thing from this whole explainer, let it be this. Your job as a trader is not to predict the outcome of the next trade. That's impossible. Your job is to flawlessly execute your process day in and day out. Success isn't about that one big win. It's forged in the discipline of sticking to your plan through hundreds and hundreds of trades, especially the losing ones.
So I'm going to leave you with a challenge. Don't just click away from this. I want you to think, what is the one concrete rule from this explainer that you will implement today? Are you going to finally define your max risk per trade? Are you going to set those hard and fast drawdown rules? Pick one, just one, write it down and commit to it. Because that's how you turn this knowledge into an actual skill. And that skill is what equals survival in this game. Thanks for tuning in.